Do exchange-traded funds, ETFs, pose systemic risk? Or are such concerns exaggerated? It's been more than 10 years since the outbreak of the global financial crisis, and the bull market, the longest ever, is in late cycle territory. This combination of concern over the next downturn, what could set it off, spread it, or push it into severe crisis, and massive inflows into ETFs has led some, Moody's Investors Service and famed hedge fund manager Michael Burry among them, to sound the alarm. CFA Institute recently convened an ETF expert panel in New York City, and we here examine perspectives raised. Yet to be tested during VolatilityJayesh. Bhansali, CFA, of the Gabelli School of Business at Fordham University, opened by describing the ETF landscape. ETFs have grown substantially in size, diversity, scope, complexity and market significance in recent years, even though they still account for a relatively small portion of the total market cap, about 10% to 12% I recall based on a study. However, the average trading volume is north of 30%. While most ETFs track liquid equity indexes, one of their key features is related to the capacity to also replicate baskets of less liquid assets and form more liquid tradable surrogates. But as we all know, this so-called magical liquidity transformation has a tremendous friction cost attached. He went on to quote from a Moody's report, "The ETF market has grown rapidly during a period of relative calm, meaning that it has yet to be tested by a period of high market distress or volatility. Unexpected market liquidity shortfalls could be most pronounced with an ETF tracking inherently less liquid markets such as high-yield credit." The report further adds, these ETF-specific risks, when coupled with an exogenous system-wide shock, could, in turn, amplify systemic risk. What is, and isn't, an ETF? To understand their risks, we have to understand what ETFs are. Investment funds, composed of systematically selected securities that trade on exchanges, doesn't really describe the ETF universe. Where people get confused sometimes is when they think of ETFs as an asset class, said Samantha Merwin, CFA, of BlackRock. ETFs are not an asset class. ETFs are an investment wrapper. They're a tool that allows investors to access the underlying asset classes. But there remains uncertainty, and some have advocated assigning the ETF label to potentially questionable products. There isn't a good classification around what an ETF is and how it sits in the marketplace, said legendary ETF market maker Reggie Brown of GTS. I think that's a weakness that needs to be addressed. You have folks out there advocating for Bitcoin, diamonds, and other esoteric asset classes that don't belong in the ETF industry. Under the microscope, so what role could ETFs potentially play in market downturns? Ayan Bhattacharya, PhD, of Baruch College. See for more on this story, visit the news article link.